Hello, and welcome to the final day of UK market missions. And today is all about the money. I wanted to obviously make sure that you guys were focused on the first panel. I'll give you a couple of minutes to join if you haven't already. Really, well, I suppose the importance of today's session is to be able to get some significant insights from the panel around the UK funding ecosystem, particularly relating to fintechs, and understand obviously the types of capital available and how to speak to a VC, how to obviously look at other forms of capital, and then of course, how do you go on your journey towards what's hopefully a very good exit in the not too distant future. I will hand over to Ben Rabin in a couple of seconds to introduce the panel, but also to say that once the panel is over, there is of course Meet the Speakers, and I urge you to definitely do that. And then of course after that, we're going to start talking about the pitch day, which happens on Tuesday next week. And apologies if I've sent a few emails recently about urging you to register for the pitch day, but it's what we think is a very important part of the whole program. We'll look forward to seeing you from 9:30 to talk about that. So over to you, Ben. Thank you very much.
Peter, thank you very much indeed. And ladies and gentlemen, wherever you are, good morning, good afternoon, good evening. It's a great pleasure to join you. My name is Ben Brabin, and I have a background in fintech. But I'm delighted today to be introducing three of the most impressive speakers who I think we could hope to bring together for you. And the aim of this panel, of course, is to give you some really detailed insight from them into the funding environment in the UK, to give you the best possible chance of making the most of access to capital here in the UK. And so their perspectives collectively are really hard to match. We've got practitioners, we've got investors, we've got people with backgrounds in technology and consulting. So I will not steal their thunder any further. It's my great pleasure to introduce the panel. If I could ask each panelist just to introduce themselves briefly, and then we'll head into the questions. If I could start, Rob, by asking you to join us.
Hi, good evening, good morning, everyone. So I'm Rob. I'm one of the partners at Balderton Capital. Balderton is one of the leading venture capital firms based in Europe. We've been going for 20 years. Recently raised our seventh fund of $400 million. We're a generalist tech investor, so we invest in any sector, but we've been very active in fintech. Outside of fintech, we just IPO'd a company called the Hut Group, which is one of our investments from 7 or 8 years ago, which is one of the leading e-commerce business in the world, 6 billion plus market cap. We're also the first investor in Revolut. We're investors in other fintechs like GoCardless, Zego, Comply Advantage, etc. Fintech is a sector I focus on here.
Fantastic, Rob. Thank you very much. And Radboud, if I could ask you to join us as well.
Yeah, let's see if it's working. Yes. So my name is Radboud. So I set up Finch Capital. So we focus on financial technology, which includes also software that is relevant for financial institutions. We invest in Europe, but we also invest in Southeast Asia, especially around Indonesia, Singapore, and Vietnam. So we very much focus on the Series A and B, and have been the most active investor in the financial technology area in Europe. In that area, both in PropTech, InsurTech, banking payments, so the broader definition of financial technology. So we have office in London, Amsterdam, and in Jakarta.
Right, but thank you very much indeed. And last but by no means least, it's a pleasure to welcome you, Al.
Thanks very much, Ben. And greetings, everyone. First of all, I hope and trust all of you and your families are doing well. And huge warm welcome from me, and good on you for continuing to engage in these things. I'm moved every day in this world of Zoom by the number of people that are just kind of putting their chin up and getting on with it. So fantastic to be engaged in this, and well done, Newfound, for putting it together. I've been a sort of coincidental fintech, really. I was a rugby player, so all of you people down in Australia, I broke loads of bones on your rugby field. I'm not going to hold you personally accountable for it, but spent many years down in Australia and got into fintech in the early 2000s. Was the founder of a company called Monetize, which had a good run in the early days of fintech, and peaked out at about a 2 billion market cap. about 2,000 staff around the world, and pioneered a lot of the thinking around mobile banking, and particularly interconnected mobile banking. I've been blessed and fortunate, honoured really, to be the fintech ambassador to 3 British Prime Ministers, David Cameron, Theresa May, and now on the Business Council for Boris Johnson. And I also chair a number of the government councils and the FinTech Alliance on FinTech, and I'm also the vice chair of the Khalifa Review, which is our review on FinTech. And then a few years ago, I was involved in setting up a private equity fund called Motive Partners. Motive Partners is a FinTech only but stage agnostic investment firm, which ranges from very early stage FinTech companies right up to recently we IPO'd Dun & Bradstreet. So sort of poacher turned gamekeeper and back again, and honoured to be here.
Al, thank you very much. And sticking with you for a moment as poacher, gamekeeper, and with the many different roles you have, perhaps I could ask you to give us all just a brief overview of your view of the fintech fundraising market in the UK at the moment.
Yeah, and yeah, I'll be cautious about the at the moment, because I think anyone that's making predictions about what at the moment means, probably has a crystal ball. I think what was really satisfying for all of us involved in the industry was just how robust our fintech ecosystem proved to be. There's always a concern. Fintech has really become a gem in the UK's trading strategy and in our domestic economy. And I suppose when something like COVID comes along, you really worry, is that going to have a massive impact? Is the iceberg really that deep below the surface? And it's been proven to be the case. Yes, of course, there's been some victims, there's been some down rounds, there's been some people who struggle, but there hasn't been what there could have been historically in the UK. Certainly happened in the late 90s with the .com era, which was a complete collapse. So I think that's very reassuring. We have over 100,000 people working in fintech, inward investment far greater than any other nation in Europe, and about third in the world in fintech. In terms of, and I know we're going to talk about it a lot on this call today, but what we also have in the UK is a good range of investment companies. You've got some of them on the phone today. Historically, the UK has really struggled in the growth area. UK has always been very good at your friends and family, very good in the seed round. And of course, we've got a very robust and globally renowned stock exchange. But in that middle scale up sector, the kind of Series B, Series C, 20, 30, 40, $50 million check, we're very lucky to have the likes of Balderton and some others, but we've struggled in that. And the good news is, because over the past 5 years, we've had some real home runs, large number of unicorns, plenty of companies getting through that kind of 100 million turnover. There's an increasing interest from investment firms around the world that says, look, if you've made it in London, if you've got to Series B, you've got to Series C in London, that does mean there's a bit of a kite mark about you. So I would say generally, Ben, and of course, none of us know what the next 6 months look like, but I would say generally, the UK fintech scene is very strong at the moment.
Thank you, Al. Thank you very much. And if I could turn, Radboud, to you now. You, of course, came into investing with the kind of the massive overview of a consultant back at the beginning of your career. As you've brought that broad purview to bear, do you have any views on, I'm going to ask the same risky question, really, a little bit of a forecast on the future of the funding market in the UK?
Yeah, so we just issued our 5th state of the European fintech market this week, which also covered that. And I think contrary to what some of the firms have said, including the firm I was past for 10 years with, McKinsey, is that the market collapsed, which I think is part of their data is correct, but they're missing the whole government support that went into the funding market. So I think if you look in the last period, I think the government support vehicles have played a very instrumental role in not creating a collapse like you've seen in the .com, but creating matched funding. Now the big question is what will happen if these vehicles dry up and there is a market test. So there are a lot of good companies that got into the funding, but there are also companies that probably would have faced difficulties getting funding if it was purely an institutional market test and not a matched funding, including existing investors. So our view is that the end of this year, 2021, will be more harsh for the ones that are struggling. I think the companies are doing well. I think they always have been able to get funding, and they will continue to get. So our view is it will get a bit more, the bar will go up. Some of the funding sources from the governments and other public money will become more complicated. So more market testing there. On the other hand, we also, I think, depending what will happen with the stock market, some of the angel money might dry up. I think for the moment there is very little return if people invest in savings, deposits. I think people are also afraid of the stock market. So I think investing in startups is a relatively attractive proposition. Depending how the world looks, how employment looks for people, their outlook, that might also have an impact. So we think 21 will be, for different reasons, more of a market test, whereas I think the last 6 months have been very good and more continuation of the situation as it has been in the last 5 years.
Thank you very much. Now, I guess in a few moments, we'll turn to the details of the approach that you're taking individually. But before doing so, Rob, I wonder if I can just ask you your general view on the health and state of the market, if you've anything to add to what we've heard so far.
Yeah, I'm very bullish on the funding market. As Rob said, I think McKinsey were trying to get some some brownie points with some of their big banking clients by proclaiming fintech dead last week, and that caused a lot of amusement, I think, from anyone who actually works in the fintech market and sees the funding rounds. But yeah, we've seen very strong interest. I think what we saw was a period of late March to April to early May where a lot of us VCs were focused on our portfolio, we're focused on cost cuts, we're focused on supporting existing portfolio companies. That was exactly when Monzo had to raise, and I think Monzo had a sort of very high profile down round, and that got a lot of attention from people because Monzo is extremely high profile. But that to me is a one-off. And what we've seen since May is the funding market back in full force. As Al said, there's a lot more investors here now in Europe. We have Sequoia have opened up an office here. We have new VCs emerging every month. There's lots more capital here. And what that has meant has been the funding rounds have been very competitive for great fintech businesses. So one of the companies I've worked with, WageStream, raised a round over the summer, and there was very strong interest around that, very competitive round. And we've seen the same with other companies over the last few months.
Fantastic, thank you. And you touched on a couple of specifics there, and I'm conscious that that a lot of people were probably very interested in some of your particular deals. So perhaps we can come to those now. We've covered a little bit of the broad background, but of course, the organizations who are represented on this mission call are very much concerned about the particulars. So I'd very much like just to invite you to unpack your investor approaches. If perhaps again, I can turn to you, Rob, to begin with. What are you looking for now, and how are you going about investing right now with your fresh fund?
So we're early stage investor, so we invest mostly Series A, maybe a bit earlier, occasionally at seed. Revolut, we invested, first check was £1 million. And the sort of the top end of the range would be Nutmeg, where we invested a bit later down the line and more like 15 million. So at this early stage, we're obviously very focused on the team, and that's the first place we start. And what is really exceptional about the team? What about your founding team that really stands out? It's not just about covering the bases, it's about where you're truly exceptional. And that is, that's a place we spend a lot of time to start with. What is it that we can we have a sort of assessment framework. We look at founders and where do they really stand out on that framework. Then we look at the idea and do we get excited by the idea? So that could be an idea that's enabled by regulatory change. For example, what we're seeing around open payments at the moment is a very exciting area. It could be an idea enabled by just changes in behavior and move to more cashless payments. Or it could be a business where we can get really strong network effects. So contributory data, can we build a market type business here, or a sort of Bloomberg type business where banks are providing their data and we're able to recycle that. So we're invested in a company called Credit Benchmark, which helps crowdsource credit ratings for companies. So we love the sort of strong network effects you get with that kind of business. So looking at the idea itself, and then it's about what metrics you have. Growth is really important at our stage. We're not that interested in profitability. We'd like to understand unit economics. we're very aware of the different ways to buy growth, and we're sort of trying to sniff out whether growth has just been bought in an unsustainable way. But sustainable growth is what gets us most excited. And I think what you're seeing is the competitive funding rounds right now are for companies that are growing 300%, 500%. That's what gets investors salivating.
Thank you very much. And Radboud, how about the investors in Finch? Do you salivate for the same reasons, or what's the particular? What's your appetite most of all right now?
So basically, we evolved a bit. In the first fund, we were from seed, or I think if there is a definition of pre-seed, I think we even made pre-seed investments up to Series D, and the bulk was around Series A, pre-Series A. The second fund, I think it was more around the Series A, and in the third fund, which we start investing now, it is a bit more revenues as of 2 to 5 million. So not too early. There was sufficient data. Also, we felt that a lot of the teams are in flux. The team that starts is not necessarily the team that will scale it, and we feel a lot of the companies are changing the team or complementing the team around that phase. So first, it's I think the same as what Rob mentioned. The team is key in the earlier stages of investment. So that's where we focus. And then, yeah, I think the ID, the market, etc., needs to be big. But I think that's the easiest part, probably, of the assessment. I think getting the team right and making sure you back the right people. We feel in general that Europe is very fragmented. It is not a market like the US. So even the big home markets like the UK or Germany or France, you see, to be really big in Europe, you need to expand somehow internationally. So for us, also the international mindset and ambition of the founders is an important element. And then I think increasingly a way to get positive unit economics. I think there's a lot of focus on growth, but what you also see with a lot of the challenger banks, where a lot of focus was on growth, for example, there is now an increased shift also to unit economics and finding a way to make money. I think the jury is still out whether the markets are still like that, because some of the companies that got IPO'd recently never found a way to solve unit economics and positive cash flow. But our view that to be successful in the next 5 years is having clarity on good unit economics and a way to profitability will increasingly be important. But of course, the team, like I think with a lot of these companies in these earlier stages.
Always the team, always the team. So we'll turn in a moment, perhaps, to questions about the particular subsectors you're most excited by right now. But just before we do, Al, essentially the same question to you. You have a very broad purview right from the very early stages through to public markets. I'm curious if you see particular areas of excitement at the moment.
Yeah, I mean, I echo both the excellent comments from my colleagues on the panel. We at Motive, and I suppose in the 20 odd years I've been in fintech, tend to slant towards one of the parallel universes of fintech. If you break fintech very simply into two parts, B2C, disruptors, people that see a gap in the market that they can go and build a brand in. So we've talked about from Rob, Monzo and the neobanks and companies that think they can go and obviously Australia's produced some very successful companies in that space. Australia's got a fantastic fintech ecosystem building at the moment. We've always been much more interested in the infrastructure, so in the B2B2C or the sort of changing of the engine in mid-flight, driven by regulatory tailwinds, driven by cloud computing, data, AI, and obviously Dun & Bradstreet's an enormous example of that. We took Dun & Bradstreet private as part of a consortia only 2 years ago at 6 billion, and we just IPO'd it at 12.6 billion. We also have an approach at Motive Partners, which is that we have sort of three concentric circles, which is we have innovators, we have investors, and we have operators. So we have a very strong bench of people that have built companies or run companies before, and then we tend to put them in. Silver Lake did a lot of this in the 90s. We put them in to complement the existing teams or to create new companies. So Steve Daffron, who was one of my co-founders at Motive, is the COO at Dun & Bradstreet. Mike Hayford, who was one of my co-founders, is now the CEO of NCR. And in fact, my day job is a company called Pollinate that's redefining merchant acquiring, but for the banks. So rather than sort of the stripes, the squares, the sum ups going directly to the merchant. We're helping banks level the playing field by giving them the same Silicon Valley digital experience that those disruptors can provide, but obviously they've got the huge scale and distribution, through their bank network. And so we love infrastructure, and we love companies that, as well as the unit economics, we love operational leverage. And operational leverage in fintech comes from long-term relationships with banks, in our humble opinion. If you can get into a 5-year partnership with a leading bank, it's years 3, 4, 5 where you see a huge uplift in the profitability of that relationship. And of course, Visa and MasterCard have been the best examples of that. The final point I'd make, again, a great comment about the Europe. Europe isn't one market. I mean, this is not a Brexit pitch by any stretch of the imagination. Ben and I sit on the same place on that. But you just because you're in Europe geographically doesn't mean it's easy to do business in other European markets. I think there is an increasing set of KPIs and examples of where companies are deploying in what we would call the Commonwealth, and I don't mean the old Commonwealth, common-wealth, like-minded countries, common language, so Australia, Canada, UK, Singapore, partly Hong Kong, where you've got similar regulation, you've got the adoption of open banking, you've got PSD2 and all of these regulatory frameworks that enable the open ecosystem. And one of the things I'd implore you to do, people on this call, is look at your domestic market, not as 24 million people in Australia, but what does a domestic market look like if you can go through the sandbox in Australia and in the UK and in Canada at the same time? That gives you a much bigger market to go at, and then you can start to think about the kind of US valuations.
Fantastic, thank you. Now, this is also an opportunity for us to up the pace and do a little parallel processing. Thank you, Venkatesh, for some questions. There's one for each panelist. So if I can invite you panelists to pick off questions in the gaps in our conversation, and indeed everyone else, please do join Venkatesh in offering your questions through the Q&A on the side of your call panel as well. As you're doing that, I'm going to ask a question about subsectors. So Al, you've highlighted the fundamental importance of infrastructure innovation and the value that you can build on that. I wonder if there are particular subsectors, Rob, that you would highlight as particularly appealing to you, looking a little further ahead.
Absolutely. So, a sector I've been interested in for some time is insurance and insurtech. Made one investment in a company called Zego, who provide commercial motor insurance, and now a licensed insurer. That's been going exceptionally well. But I'd love to do more in insurance. It's a colossal industry, and there's been very little disruption. And I think the successful IPO of Lemonade, on the basis of not very little innovation with product, a nice brand, and some a great team, that being able to IPO with unit economics that are pretty questionable is a sign of the demand here and a sign of the opportunity. So I really would encourage founders to do more in insurance. I think it's very much an open playground. Beyond that, we remain very excited by payments. Invested earlier this year in Primer, which is about abstracting the payments layer. Excited by open payments, so anything in the payment space. And also looking increasingly at the software and capital markets sector. I mentioned Credit Benchmark earlier, Comply Advantage in anti-money laundering, just investing in another capital markets software business. So we see huge potential there. And I guess the final sector is around financial wellness. And I think that's particularly important after the last 6 months, but how do you help people get control of their finances? How do you help people manage through a very difficult time financially? So a couple of investments in that area with WageStream and Clio, one working with employers and their employees, and one going direct to young people in the US. So I think that's another big focus. Overall, we're very broad in what we look at. I think lending is the area that we're more nervous about right now. For obvious reasons, but I think something for a few years, I think we've been a little bit nervous around doing more in the lending space. So I'm less excited by that area.
Fantastic, thank you. And I guess we're going to want to turn in a few minutes to specific advice and opportunities for companies coming into the UK who have already established themselves overseas. But just before doing that, Radboud, to you again, are there any particular subsectors that are really emerging for you as important and interesting?
Yeah, so we like a lot of boring sectors in the sense that think about regulatory technology, KYC, AML. There's a lot of money spent by financial institutions. There's a lot of inefficiency, but there's also a bit like the paracetamol effect. It's a big headache for financial institutions. So the sales cycles tend to be quick. I think on the lending side, there has been a big hype on lending also at the time of the funding circles, etc. And some of these IPOs, if you look at where they stand now, are a fraction of what they are. I think it's sector wide, but we still see opportunities in some areas. But what we like is that it's the competitiveness is way less, because like Rob said, I think the general appetite for that sector has decreased a lot compared to 5 years ago. Then in the AI, machine learning, we see several opportunities. It depends on the use cases. We also made some investments which are space related. There's a lot of space which was more exceptional and very highly priced. Is increasingly data as commoditizing, which has use cases for insurance. Think about agriculture, think about transportation, where suddenly a lot of data is now becoming available, which helps with the underwriting as well as the monitoring and collection. So the whole domain of space with low orbit satellites is something we like and have made investments in and will continue to do so. And then in the boring areas of payroll, tax, like a lot of these areas which have a combination of fragmentation and a lot of manual work and are a headache, are also areas we like. So I would say a bit more the less sexy side, less B2C, a bit what Alistair also was saying, a bit more the B2B, B2B2C type of solutions is where our focus is on now.
Fantastic, thank you. So keep it unsexy, I guess, is a piece of guidance for us today. I wonder if we could turn, this is perhaps no, I'm not going to try a segue with this, but COVID. Let's be brief, but can you just each give a snapshot of your view on the effect of COVID? Let's keep this as quite a sort of limited window, because we want to turn quickly to things which people can influence and control. But how are you adapting, and how do you see your portfolios adapting to the challenges posed by COVID? And again, perhaps we could start with you, Rob.
So I think Al mentioned this earlier, it's being flexible and being nimble and being able to adapt to what's going to keep changing over the next year and maybe beyond. But also not being, I think probably we were a bit too cautious in Q2. A number of our companies cut staff or certainly stopped hiring, and they look back and wish they hadn't done that at this point. So not overreacting as well. And yeah, I think underwriting for lending businesses is going to be really interesting to watch over the coming years. And I think a lot of lending businesses that started in 2010 or later have always had good years. Up to now, it's been sustained by furlough payments and government grants, and everything's still looking rosy, but that will not last. So I think being very careful around that.
Thank you. And Radboud, what's your view?
Yeah, so maybe a couple of dimensions. So one thing is that if you look at the B2B side, where typically sales cycles are long, I think they are facing the biggest impact, because especially for smaller startups, there was a little bit of a relationship, leap of faith component why big enterprise people were giving a solution to someone who is small, and there the in-person really helped. And we had, whether you're like the big companies like Adyen, which are already well established, or smaller ones, I think B2B is probably facing the more challenges from not being able to meet in person. Then you see big regional differences, like the US is more, at least what we have seen, US clients like more and are more open to do remotely than, for example, Asian, and then Europe maybe is a bit in the middle, depending also on the country. I think otherwise, for day to day, I think we were anyway very international. So Zoom, it's not that we had to install Zoom when the lockdown started. I think we're doing a lot of Zoom already. So I have the feeling that the tech industry and the investment industry was already doing a lot of remote work. But yeah, personally, I miss, as part of the job, and it's maybe more something personally. I think I don't miss all these conferences because I think it was something you had to go to, but I think it's fine for me. But meeting the entrepreneurs in person, I think gave an extra dimension than meeting people all over Zoom, getting a sense of the culture, the vibe. And I can imagine what I hear from a lot of the portfolio companies is being an entrepreneur or working at a startup and not being with your colleagues and together working to crack the market is also something that is a dimension that people liked of being in a startup and they're missing now. So I think looking at where we are now, I think that maybe it's more 2021 that it will come back. We were all back in the office, but in the UK, people, our London colleagues just moved back out of the office again. So yeah, I think it will take a couple of months before we're back to some form of normal. But we were flying 3 days a week. I think we're now, we're cycling to the office or we're walking. That is our travel within a week. So I think that will take some time before that's back.
Thank you very much. And Al, I guess you're bringing us a perspective from a little further away from Crete. You're not just giving us a distant perspective, but a whole fresh aspect ratio as well. So perhaps you could just give us your snapshot picture of the impact of COVID, and if you feel comfortable with any forecasting, your best guess for the future.
Well, look, I mean, I think Raboot's comments were absolutely on the money. When I either decide to build a company or invest in one, like all of the panelists have said, I look at the team and I look for a blend of EQ and IQ. You look for people that are super smart, they're geeks, they love their technology, but also you look for the schmoozers and you look for people that can build relationships and get under the skin of the partnerships you're trying to create. So yeah, I think for people that are more EQ led than IQ led, it's been a really tough time. Because if you are a salesperson or a business person, you like getting on the road, you like meeting people. That's how you get your essence of the market opportunity. And that leads to a much more important point for all of us as business leaders, which is the mental well-being of our staff. And we've in Pollinate launched a number of initiatives over the last few months to make sure people are getting the support they need and are feeling encouraged and can have at least those virtual whiteboarding sessions and walks in the park that are just such an important part of life. So I agree completely with Raboot's comments that if you haven't already got those big relationships or you haven't already had some very good senior meetings with the big distribution partners and you're a B2B2C company, then initiating a new relationship is really, really difficult in this environment, no question. I also, just picking up on some of Rob's points, we're interested in data and alliances. We're great believers in sort of 10% of a big number rather than 100% of a brilliant idea, but not a commercial scale-up opportunity. And I think what William Hague, the ex-British Prime Minister, wrote a superb article about 3 months ago in the Telegraph about how COVID has actually just accelerated an inevitable 10 years of shift. So shift to more remote working, shift to e-commerce, contactless payments, the end of cash, lots of other things that fintech's going to be heavily involved in. And we're seeing literally daily that happen. We're seeing pubs, restaurants, bars, small businesses, people that knit jumpers who've never had an e-commerce presence, never even thought of an e-commerce presence, suddenly recognizing that if they don't have an e-commerce presence, their business is dead. If they don't have delivery services, their business is dead. And so what it's done is it's accelerated where the world was going. That will reset a bit, of course. It will reset when things start to return to some sort of normal. And I know many of my colleagues and friends on this call down in Australia, you've had a really tough, particularly if you're in Victoria, really tough few months in lockdown there, but as your weather gets better, it seems that the cases are coming down. So we're going to look at the world and we're going to see these kind of pattern shifts towards the new norm. But one thing's for sure, we've renamed our office. It's not called an office anymore. We call it the Pollinate Performance Centre. People are able to go there as they see fit. But the idea that we're going to have everyone returning to the office, commuting between the hours of 7 and 8:30 in the morning on a busy tube, forget it. We're never going back to the way it was before.
Thank you very much indeed. I guess some themes have emerged very strongly here that that many things are changing faster as a result of COVID, but that the challenges of personal engagement, of relationship development, Al, as you put it, for those who depend upon EQ, emotional intelligence, this is a particularly challenging time. Let's turn now to the challenges faced by organizations on this mission in particular. So I'd just like to ask each of you, we want to make sure that the many different nationalities represented on this call, and I appreciate there's a very strong Australia and New Zealand presence, but there are many other nationalities represented on this call too. So broadly speaking, for organizations planning to come into the UK market, looking to do so with an eye on fundraising from venture capital investors locally, let's turn now to the particular challenges that they face. Now, some of the Q&A questions we've already seen are asking about presence of co-founders. They're asking about recruiting the first parts of those teams. So can I ask each of you just to talk us through what it is when a company comes to you from overseas, it's already got traction in an overseas market. What is it in particular you're looking for in them, and especially now? So if I could start with that again to Rob.
So yeah, we're an early stage investor. So it's not often that we invest in an Australian or South African company that's come into the UK, because often they have built some business already in Australia and New Zealand, and by the time they come here, it's Series B+. We do actually, a year or so ago, we did launch a later stage investment fund, focused at the moment on secondary only, so on buying shares of existing shareholders. And so that as later stage, and so that could be certainly more of a fit with that fund as sort of companies coming to Europe and expanding here. The investments we have made in the past from outside Europe have been ones where they've been entering European markets. The founder in all cases has moved to Europe, or at least a founder has moved to Europe, and it's still very early days. So they see the UK or other European markets as a big opportunity. At least some of the founding team comes over and they really build from here. So example would be Prodigy Finance, which is originally a South African company. They do international postgraduate student lending. They kept their tech and support teams in Cape Town, but the CEO moved to London and sort of built out his finance and sales team from London and internationally.
Thank you very much. And Radwood, to you as well. What are you particularly looking for companies that are making that step into
I think the same what people always say about if you want to go in the US, US investors want you to be present in the US. I think increasingly that is also the case here, and that's at least a bit how we see it. If you talk about going to Europe, but you haven't hired someone and there's no like hard evidence of a first launching customer or a product or an entity. So I think you should make the first step, at least for us, to prove that is going to work. I think in general, I would say we're not big believers in it. I think we see a lot of companies also coming from the UK to planning to go to Australia, where I think it's such a big time difference that you should almost treat it as two separate companies, or it needs to be software. And then I think if there should also be other solutions to go there, then it's more expanding your product into that's more like a sales office. Then you probably have a launching customer, you have a first person. But I think in general, having the evidence that you're on the ground, having someone there, I think then you tackled also all the COVID issues, because you can just speak with someone in London or within the UK without having all these flight restrictions. But there needs to be evidence that you're going to do it rather than planning to do it and on the back of that hoping that it's going to work.
Thank you. And Al, I guess you've experience of going on tour and coming back with broken bones. How can people coming to establish in the UK stay intact?
Yeah, well, I thought I'd never find anything tougher than running into Pacific Islanders, but working with banks is definitely right up there. And you know, joking aside, my empathy for all of you. I've had some great messages on this call already, really great messages and questions. You know, you understand how difficult it is. You know, you can't personalize it, but the inertia in big organizations to make procurement difficult, to make sales cycles so hard, it can be very frustrating. But of course, the reward is huge amounts of distribution. I mean, one of the bits of advice I would give you is, you know, if you're onto something in your own market and you can look at the UK and you can see another company at a similar stage to you doing something very similar, then, you know, now is a great time to look at, you know, partnering, merging, you know, joining forces. The other thing I would say is highly attractive, certainly to an investment firm like us, is if you've got at least one of those kind of legs of the table, as we call it, one of those big relationships that's a long-term relationship. Let's say you're in South Africa and you've got a relationship with Standard Bank, or you're in Australia and you've got a relationship with Westpac Bank. We're seeing a big shift to non-competing geographic banks starting to share information, share data. If you look at Bain and Company, they've got the B10, which is 10 non-competing banks working together and sharing information. We at Motive Partners have something called Motive Labs, where we have a number of banks around the world that share ideas and share innovation and market feedback. So if you're, you know, well set up, you know, your years 2, 3 of your company, you've got a really strong relationship with an anchor customer in your territory, they're the things that really appeal to investors. And if you can find another company or a group of people in the UK that might also be able to facilitate a similar deal, then suddenly you're de-risking the investment enormously, because you start to see that operational leverage come through. You know, if you're a B2C, you know, certainly if you've got a lending product and you're going to try and establish a new brand, now is not the time to do it. You're not going to find appetite from investors in the UK at the moment.
Thank you very much. And in a moment, we'll turn to your top tips for fintech companies coming to the UK seeking investment. So perhaps we can end on that high note. But before we do, of course, we like to celebrate success, but I think it's important to look for what lessons we can learn from failure too. So I'm going to ask each of you any particular advice you have about what not to do. If you've seen patterns of error, which we can alert people to so they don't fall into those common traps. Do any of you have, this is really a free-for-all, open to all, any advice not to do anything which you see as a common error?
Yeah, I'm happy to. Go, Rob, please go.
Just a quick one. So I think I see quite a lot of companies where they get excitement from one bank and there's a big name bank and they spend a lot of time with them, end up building something pretty bespoke for that bank. And end up too far down that road where they basically built something just for Bank X, and that leaves them with no options in the end. They effectively have a sort of £5 million revenue line with one bank and no business beyond that. So I think that's a dangerous path to go down.
Thank you very much. And Radboud, do you have any errors to avoid?
Yeah, so I think I think in the world of startups there are a lot of errors, but I think most of them are not dramatic because you learn from it. So, but I think where I've seen people going dramatically wrong is expand to too many countries in parallel, like expanding into 10 countries and spreading yourself as a result to 10. Then it's better to focus a few and get it going. I think also the UK, especially if you go B2C, is a market where I would hire for sure local people, people that know the market. So just someone that, if you're successful in the Australian consumer market, does it mean that you per se will be successful with that same person there? So I would hire some local talent also to make sure it works. And if you have a proven product in Australia, I would do some testing before you actually really go there. Like this first phase of making sure it all works, and before setting up companies, hiring people, raising funding for the UK, just do sufficient testing because it's a long flight. At least from the UK to Australia, it's long. So I guess it's the other way around as long.
Well, thank you very much.
And on those points from Rambo, which I completely agree with, you know, the great news is there are so many resources available to you now to test exactly what you've just been advised to do, which weren't there before. Look at the FinTech Alliance platform. Yeah, we've got the sandbox. We've got a very open government and regulator keen to encourage you know, more fintechs coming in. Post-Brexit, of course, you'll see a number of initiatives designed to encourage people to set up in the UK. That could be relating to tax. That could be relating to you know, R&D credits. And you know, the good news is the UK wants to welcome as many companies as possible. We want to retain our role as the premier fintech ecosystem in the world. In terms of the question, Ben, about failure, mistakes is critical, right? It's absolutely critical. We have this huge societal challenge in the UK. It's getting easier, but people still get embarrassed about saying they're an entrepreneur at a dinner party, and everyone looks into their soup and looks a bit embarrassed. In the US, if someone says to you, how have you got on over the last few years, and you say I've failed 5 times, they're giving you high fives and saying great, well that means the next one's going to be really successful. So it's got to be somewhere in between. The one thing I would say to you is your idea is not unique. Please take that from me. The number of entrepreneurs that I get letters from, emails from, saying that they've found this kind of completely unique algorithm. It's a 1 in a billion shot, and I think that the follow-on advice from that is 10% of a big number is a hell of a lot better than 100% of an idea that never scales. And so if you think you've got something that's great, go and work out who else believes in your idea or is already pursuing your idea, and see if you can collaborate and partner. Don't think that just because you had a great idea in the middle of the night one night it's going to make you a billionaire, because it doesn't work like that.
Well, thank you very much indeed. And I guess we should all hope that the mistakes we make are new mistakes, not old repeated mistakes. So thank you for sharing those glimpses of what not to do. We'll turn in a second to what to do, to your top tips. But as you pointed out, Al, there is a great deal here, which I know that during the course of this mission, much of it will have been revealed. But subject to travel restrictions and so forth, I think it's worth just highlighting what a warm welcome exists for fintech companies coming to the UK, how rich and diverse the investor pool here is, and how many other organizations, whether it's Fintech Alliance and other organizations providing information like that, or indeed a very active and engaged regulator. These are all parts of the scene welcoming any fintech here in the UK. And with that in mind, and knowing that over the course of this mission, you've covered many different details, we're going to stick well within our rails here and just ask each of you as investors your top tip for people coming into the UK seeking to raise money for their fintech venture. So let's be really reductive here, boil it down to one single thing. What's your best piece of advice in 30 seconds each, please? If I can again start with you, Rob.
I think the key is showing really impressive metrics, showing really strong growth, either viral or with great unit economics, and having a great business. If you have that, there is lots of interest, lots of investor interest, there's lots of partner interest. As you say, there's a supportive regulator. So I think, coming here with numbers and with, what is a really strong business.
Rob, thank you very much indeed. And Bradford, to you.
Yeah, so it's not that different, unfortunately, but I would only add, so it's great traction. So if you're probably coming from, whether it's India, Australia, New Zealand, or South Africa, but at least great traction there. And then some proof that people get comfortable that that great traction can be replicated in the UK. Because that's, I think, where a lot of people then will do a test. Was it just Australia specific, or can you replicate this success in the UK?
Thank you. And Al, the last word to you.
Yeah, I mean, I obviously, of course, agree with my colleagues. I would sort of give a bit more of a sort of personality bit of advice, really, which is I always look for management teams, leaders that have humility and empathy. It doesn't matter how good your idea, back to Rob's point earlier, has been in one particular place. You've got to respect that it is a competitive world. We look for management teams that have 2 ears, 1 mouth. They want to learn. They're very keen to take advice, not think that it's just another hill that they're gonna come and take. So I think that kind of humility and empathy. If you can demonstrate a track record where you have managed to bring partners with you, I thought Rob made an absolutely fantastic point. The graveyard is full of businesses that have signed with one big company and allowed that one big company to basically make them a little internal fiefdom of innovation, but restricted them from any scalability. So, show that you can adapt and be part of a broader ecosystem is very important.
Al, thank you. Thank you very much indeed. I'd just like to first thank all of our delegates. Thank you for joining us. And I'd particularly like to thank my fellow panelists. So Rob, thank you. Bradford, you, and Al, you as well. And of course, thanks very much indeed to the newfound team for bringing us all together. And with that, I guess in a few moments, you'll have the opportunity to join the speakers. It's for me now to hand back over to Peter. Peter, thank you very much.
Nice job, Ben. Well done.
Ben, I've got to say that was a masterclass in moderation. Thank you very much. It flew by. I mean, I suppose being the money panel, there was tons of nuggets there, little diamonds there for you to pick up on. And now you can obviously go and meet the speakers. So before you do that, in a few seconds, just to remind you, pitch day. I'm told now that there's 24 of you registered, so that's great news. And so come back and join us at 9:30. And we'll take you through all the preparation that's required and give you a few other insights around the newfound team as well. So off to your virtual rooms, the panelists, and we'll see you in a few minutes. Thank you very much.